Today, you're about to uncover secrets of double bottoms. You'll learn the meaning of charts, not shapes. What is a double bottom? Importance of market structure, strength and weaknesses, types of double bottoms, 4-step double bottom trading strategy, and trade examples. Hello friends, hope you're doing great. Double bottoms are in my top 10 list when it comes to trading chart patterns. It's a really simple way of trading once you get used to it. As usual, I'll teach you the step-by-step trading and confirmation methods with examples, so at the end of the video you'll have no question in your mind about double bottoms. In my next video I'll go over full trading examples of stocks and cryptocurrencies. If you're ready, let's start. Okay. What's actually a double bottom pattern? Well, unlike what you read everywhere, it's just a change in market structure. A shift from a downtrend to an uptrend, a beginning of possible higher lows and higher highs. So, the double bottom pattern is born out of market structure change. You will hear these terms: reversal chart pattern, W formation, support line trading method, price action reversal technique. You can call it anything you want. As I always say, names are not important. The important thing is the meaning of the price action. So, it's simply a market structure change, that's it. You will see the double bottom pattern generally at the end of a downtrend. With the double bottom, we expect the trend will change from a downtrend to an uptrend. Will it work every time? Of course not. Like every other strategy, technique or pattern, this is also not perfect. But I will teach you how you can improve double bottom pattern trading for maximum profit and cut your losses quickly if it is needed. Let's understand market structure change. In a downtrend, you'll commonly see lower lows and lower highs. This is your current market structure and current price action. And there is momentum. Every security has momentum. If the length between lower lows gets shorter and smaller, it means that security loses its momentum. So, at one point in time, the current lower low and previous lower low stays at the same level, creating a support line. That is the moment of end of the momentum for the downtrend. And our double bottom comes to life. So, sellers are exhausted and buyers taking control of the price action. Strength of double bottoms. 1. Well, first of all, the double bottom is one of the strongest patterns in the trading world. 99% of traders will recognize it and consider it highly before opening a position. 2. Easy to identify. You can easily identify your double bottoms because they generally appear at major support lines. If you draw support lines on your charts, you will definitely witness too many double bottom examples. Weakness of double bottoms. 1. It is a reversal pattern. Have you ever heard of a saying, trend is your friend? So, you're actually playing against the trend. You have to be careful. You need extra confirmations before entering a trade. 2. Well, a double bottom could quickly turn to a bear flag pattern and continue its downtrend. And bear flags are stronger patterns in my eyes. My number one patterns are bull and bear flags, and also trading pullback breakouts. How to identify the double bottoms? First of all, I would like to show you a trick. Traditional candlestick charts could be really hard to read from time to time. I always switch between Heikin-Ashi and traditional charts to recognize patterns quickly and check if there's something that I'm missing. Heikin-Ashi helps me to see trends and patterns more clearly. The first thing I look for is an existing trend and strong support lines, because you cannot trade every double bottom. You need a market structure change for a valid double bottom. Types of double bottoms. I see some traders out there looking for perfect shapes. But what I always say, trading is not about shapes, charts or patterns. It is all about price and the meaning of the price action. I never look for perfect shapes. As you can see, we could have a perfect double bottom in which both bottoms bounce from the support lines perfectly. The other two types, one of the bottoms actually breaks the support level and gets back in line. For me, all three types are valid, because all these three tell me that differences between previous and the current lower lows are getting smaller. So, this financial asset is losing momentum, sellers losing control, buyers are gaining power. Can you see it? I read the price and the meaning. I'm not concerned about the shapes, patterns, or formations. Time frames. Okay, this is one of the universal time frame patterns. It is used by scalpers to investors. You can basically use it with any common time frames, 5 minutes, 15 minutes, 30 minutes for quick gains in and out, 1 hour, 4 hours, 1 day for swing trades. However, if you use lower time frames like 5 minutes or 15 minutes, noise increases and accuracy decreases. If you're an investor for the long term, I would check trend channels before using double bottoms. 4 steps double bottom trading technique. Now, this is the most common and a strong way of trading double bottoms. I'll teach you everything in step-by-step instructions as usual. Because step-by-step trading and confirmations before entries are the way of success. 1. Confirm downtrend and double bottom. The first thing you should do is spot a double bottom on the chart. You can use the Heiken Ashi bar type to quickly identify a double bottom. However, there should be a downtrend to reverse. Also check the market structure. 2. Confirm support lines. Now, this is an optional step, but very critical. If you can confirm a support line around the double bottom, it's great. My suggestion is open a higher time frame. If you trade with a 1 hour time frame, open 4 hours chart and draw your support lines. Don't worry, I'll show you an example soon. And in my next video, real world trading examples. 3. Confirm RSI divergence. This is also an optional step. However, I strongly suggest this one because if you trade reversal patterns and looking for an indicator for it, RSI divergence is the king. 4. Confirm entry. Finally, as usual, you never enter a trade without any confirmation. I'll show you 2 types of entry. One is for secure entry. The second one is a riskier entry. Okay, let's go over a couple of examples now. And in my next video, we'll go over full trading examples of stocks and coins. Okay, let's check this example. Step 1. Confirm downtrend and double bottom. Now, as you can see, the security makes lower lows and lower highs and performs a downtrend. Check your market structure before trading anything. Highs and lows are extremely important. And you can see the double bottom is obvious here. Again, double bottom means sellers are getting exhausted at the moment and buyers are taking the control. How do I know this? Because of the difference between lower lows. Sellers cannot push the price down anymore. Step 2. Confirm support lines. I'll zoom out the chart a bit. Can you see the support line? How strong is this support line? 4 times tested but not broken yet. If you cannot find a support line with the time interval you trade, look for higher time frames. For example, if you trade with 5 minutes chart, check your 15 or 30 minutes charts. If you trade with 4 hours chart, check your daily charts for support lines. This step is optional, but I suggest you find a support line. This will make the trade much stronger. Step 3. Confirm RSI divergence. This is the easiest step, nothing complicated. As you can see, there's an obvious RSI divergence here, a strong confirmation for reversal patterns. Step 4. Confirm entry. Finally, the entry. Now, there are 2 types of entry. 1. Risky but rewardy entry. 2. More secure entry. Let's start with the risky one. As the name suggests, the risk and reward are high with this entry, because you are entering without confirming market structure change, which means that we did not see a higher low yet. As you can see, the first higher low comes much later. What I do is, I'm looking for the most recent red candle with the largest body. This candle was the last castle of sellers. If the buyers can beat this candle, we have an opportunity. My entry is the first green candlestick that beats the high of the most recent red candlestick with the largest body. My stop loss is at the bottom of the pullback, maybe a few pips below. My take profit order is at 2R as usual. This entry could be risky time to time. Now, let's check out a more secure entry. The core of secure entry is confirming the market structure change. What does this mean? It means we are switching from lower highs and lower lows to higher highs and higher lows, also known as uptrend. This is called the neckline. So we are breaking the neckline and igniting a possible uptrend. Some traders enter a trade at the moment of the neckline breakout, but I do not. What I do is wait for a pullback to neckline and then a pullback breakout. And you know me, I'm a pullback breakout lover. What actually happens here? A bull flag pattern, my number one pattern to trade. So, my entry is simple. The first green candlestick that beats the breakout candle's high. As you can see, this green candlestick is my entry candlestick. And my stop loss is at the bottom of the pullback. My target is at 2R again. I mostly use 1R to 2R risk-reward ratio because it's comfortable to use and consistent. Okay folks, another adventure ends here. I try to teach you every secret and detail of how to trade double bottom pattern, so you can use it in your trading life with minimum mistakes. I hope you subscribe to the channel and like the video, so you won't miss the next video, which I'll cover so many examples of stocks and cryptocurrencies with double bottom pattern technique. Please take care and see you soon.